Hello students, welcome to AffairsCloud.
We have an app called Careers Cloud which you can go and download it from the Play Store. So after downloading it, you can easily log in using your Gmail ID. Once you have logged in, you will be redirected to a home page which contains 4 tabs beneath it. One is Home, the other is All Courses, next is My Courses, and the last one is a Doubt Session. So under All Courses, you can access various types of courses like Reasoning, Quant, English, and also exam specific courses can also be accessed under this All Courses. If you click this Crack Current Affairs, you will be redirected to this page. So under this, you can see various tabs that are available. So here, if you see, the current affairs will be available in English medium, this under Hindi medium, and here banking awareness, we will provide you the monthly compilation of the banking news and current affairs exam PDF, and also special current affairs, which includes mainly the budget, the union budget, the economic survey, which is very important from the exam perspective. And this is topic wise content where that topics news related to the specific topic, they will be combined together and provided to you. For example, see appointments. All the appointments in that particular month will be combined together in a specific place. And similarly, in case of banking, economic news, so all will be combined together. So this will be easy for you to relate to each other news. Next, you can access the daily current affairs on a daily basis, weekly basis, and also on a monthly basis. So after reading the weekly or the daily news, you can also attend our quiz in order to strengthen your knowledge. Under the monthly current affairs, if you see, there are 2 types of PDF that are available. One is the pocket PDF, the other one is the normal PDF. This pocket PDF will give you a brief content of our current affairs, and this will provide you a detailed analysis of the current affairs. So it is always preferable to read this detailed analysis and then have a go through of this pocket PDF. Next is that we also provide you the PIB news apart from the current affairs. So you can go and access our PIB news on a daily basis from this path. And as I mentioned, this special CA covers very special topics like budgets and economic survey. After reading the content provided in this PDF, you can go and attend the quiz given below. And next is the exam perspective PDF. So if you see IBPS PO mains, IBPS RRB clerk, SBI clerk, so these are all exam perspective PDF. So if you go and check, these PDF will contain around 5 to 6 months of the current affairs, which has high chances of high chances of being asked in this SBI clerk mains exam. So it is very useful to go and read this PDF from an exam perspective point. Good evening. Today we will be covering July 1st week banking and finance awareness news. Moving to the first news. The first news is about the financial stability report that has been released by the Reserve Bank of India. So this FSR report, if you see, it is a biannual report, which means it is released twice a year. So once, if you see, now in June and the other time in December. So twice a year this has been released by the Reserve Bank of India. So what is this FSR? So this is a collective assessment of the subcommittee of Financial Stability Development Council. So if you see, there is a Financial Stability Development Council that is headed by the Finance Minister. Okay. So here if you see, what happens is that apart from Finance Minister, there are various other regulator representatives also present in this FSDS, such as RBI, SEBI, and also IRDAI, PFRDA. So all the people from this regulators will also be present in this FSDC, and also there is a subcommittee of FSDC, and this subcommittee is headed by the RBI governor. So RBI governor heads this subcommittee. Okay. So the collection of all the data, everything, assessment, everything is done by the subcommittee of the FSDC. So here if you see how is the economy, how is the domestic economy, how is the foreign economy, and how is the financial system in India, whether the banks have enough adequate capital, whether the insurance companies have adequate capital, all this is assessed, and that is being released in this form FSR, that is Financial Stability Report. So we will cover all the key highlights from the report. First, Indian economy remains the key driver of the growth. So if you see, there has been a lot of headwinds happening in the world. Okay, a lot of trade imposes, trade quotas imposes, trade tariff imposes, lot are happening. But in spite of that, if you see, among the major economy, Indian economy has been the fastest growing economy. And the main reason because of that is that India was not much affected by the external shocks. Okay, all the external shocks that were given, that did not affect the Indian economy much because India's domestic demand was high. So due to maybe because of India's huge population or something, the domestic demand was very high in India, and that is why the Indian economy was not as affected and was still the fastest growing economy in case of major economies. Okay. So if you see the GDP, 6.5% in financial 26 it is projected. And the headline CPI inflation, if you see, has been a 6-year low. That is 2.8% in May 2025. So in May 2025, the recorded inflation was just 2.8%. It is a 6-year low. And foreign exchange reserve, if you see, as on June 2025, the foreign exchange reserves held by India is 697 billion. This is more than enough to cover our 11 months of imports. So our foreign exchange reserves are also very strong. Inflation is also coming very less, and GDP's growth is also being good. That is why India remains the key driver of the global growth. Next is the corporate bond market saw record issuance in financial year 25. So if you see corporate bond, it is the bonds that are issued by the corporates. This is one source of funding for them. Just like how shares are issued, just like how they go to the banks to get loan. Similarly, they issue bonds and in turn they get fund from the people. Okay, that fund is used for multiple purposes. So this year, financial year 25, it has seen a record issuance of this corporate bond. So the corporate bond, if you see, as on March 2025, there is 53.6 lakh crore corporate bond outstanding, and in financial year 25 alone, 9.9 lakh crore, around 10 lakh crore corporate bonds has been issued in financial year 25 alone. Next is NBFC share, that is non-banking financial companies share of stressed assets. Stressed assets are nothing but NPAs, and also the assets where there are dues, okay, where there are unpaid EMIs, those that are called as stressed assets. That has been increased to 5.9% in March 2025. In September 2024, if you see, the stressed assets accounted for just 3.9% in case of NBFCs, but later by March 2025, it has increased to 5.9%. Similarly, here if you see the upper layer NBFCs, this is regarding the write-off. So write-off is nothing but the banks or the financial institution, they write off certain bad loans from their balance sheets so that the balance sheets are looking clean and neat. So they remove the bad loans from their balance sheet completely. And what does this mean? If they are removing, then 100% provisioning should be done. So when a bad loan is removed from the balance sheet in the name of write-off, then always there is 100% provision being made by the NBFC or the banks. Only then after that, if you see, this write-off is done. Okay. So in case of upper layer NBFC, if you see, the write-off has been increased from 50% to 72.9%. That is from in June 2022, the write-off was 50% and now it has been increased to 72.9%. Similarly, in the middle layer also, the write-off has been increased from 20% to 38%. So if you see, we saw the stress assets also increased in the NBFC and the write-offs also increased both in the upper and the middle layer NBFCs. And we also saw what is a write-off. So the NBFC, including the housing finance companies, the fintech firms, all together, if you see, they account for 84%, around 84% of the personal loans are below 50,000. So if there are 100 people out there, okay, who have taken 50,000 loan or say some 40,000 loan, in that 100 people, around 85 people had taken the loan from fintech companies or NBFCs. And the remaining 15 only from the other sources. Okay, so this is the composition of the personal loans that is below 50,000. Next is bank gross NPAs fall to a multi-decade low of 2.3% in March 2025. So here if you see the gross NPA from 2.6% in September 2024, it has gone down to 2.3%, a decade low. And also the net NPA has also gone down to 0.5%. So what is NPA and what is net NPA and gross NPA? See, when you do a provision to the NPAs, you derive at the net NPA. Okay, so gross NPA minus the provision, you arrive at the net NPA. So net NPA, it is a good figure that tells that how much amount of capital the banks have to provide for the provision. Okay, see, how is that provision given to the gross NPAs? From the profit, right? From the profit, the amount is transferred to the provision. So only if the bank has enough capital, they can take money from the profit and give it as provision. So when the net NPA is reduced very much, it indicates that the bank has enough amount of capital, enough amount of money to absorb the losses. So these are very good indicators that the banking system or the bank system in the country are very, very strong. So remember, gross NPA as of March 2025, it was 2.3% and net NPA 0.5%. And agriculture contributed to the maximum gross NPA, that is 6.1%. And next is that if you see out of the large borrowers, the total NPA, if you see, the large borrowers constituted 37.5%. The large borrowers in this means that they have exposure of more than 5 crores to a scheduled commercial bank. That is what it means. It includes both fund-based and non-fund based together. Together, if they have an exposure of 5 crores and above, then they are considered as a large borrower. And large borrower, out of the total NPAs, if you see, they constitute 37.5%. And out of the total loan outstanding, if you see, they constitute around 44%. Okay. Remember, out of the total loan outstanding, they constitute 44%. And out of the total NPAs, they constitute 37.5%. Next, if you see the various scenarios, how much in case of, by March 2027, what will be the gross NPA, the capital adequacy ratio and the common equity tier 1. And also in the adverse scenario 1, what will be the case? In adverse scenario 2, what will be the case? So these were conducted. These are macro tests. Okay, conducted by the Reserve Bank of India. So when situation goes worse or in the future, how will the situation be? Because it is very important to be prepared for the future, right? That is why these tests are conducted by the Reserve Bank of India. So in case of March, as of March 2027, if you see, the gross NPA is expected to be 2.5%, the capital adequacy ratio 17%, and the common equity tier 1 is 15.2%. So if you see the capital adequacy ratio, it consists of two parts. One is common equity tier 1 and tier 2. Okay, tier 1 is even more stable and stronger. So that is why common equity tier 1 is considered here. That is expected to be 15.2%. In case of adverse scenario 1 situation, if you see, gross NPA is expected to increase to 5.6% and capital adequacy ratio go down to 14.2%. Common equity tier 1 12.5%. Next, in case of adverse scenario 2, 5.3%, gross NPA 5.3%, capital adequacy ratio 14.6%, and common equity tier 1, it is expected to be 12.9%. Okay, please remember at least March 2027 data. Okay, March 2027 data at least you have to remember. Gross NPA, capital adequacy ratio and common equity tier 1. Please remember. Next is write-off, the major factor for low NPAs in the past 5 years. So I told you, right, when will they do a write-off? When they want to clean the balance sheet. So when they do that write-off, say suppose there is an NPA of 500 crores in that particular bank, okay, and they have written off say 100 crores. And now what will be the NPA in the balance sheet? The NPA will be 400 crores. So the NPA looks lower, right? But actually 500 crores is the NPA. Since 100 crores has been written off, now the NPA looks lesser. Okay, so that is why to clean the balance sheet, they do this. So by writing off, what happens? The NPA is lowered down. That is why they have mentioned here that write-off is the major factor for the lower NPA in the past 5 years. So many loans have been written off. So marginally increased for the scheduled commercial bank, that is the write-off has been marginally, not huge, but it has increased from 29.5% to 31.8%. One more thing you have to remember here is that written off, if a loan is written off, it doesn't mean that the banks do not have rights to recover the loan from the public, okay, from the borrower who has defaulted. Remember this, because many gets confused that if it has been written off, then the borrower is not liable. The banks will not go ask the borrower. No, nothing like that. When it is written off, still the borrower is liable. Still the banks takes various steps to recover the money from the borrower, because banks still have the right to recover the money from the borrower even if it is written off. Next is borrower indebtedness in microfinance declines to 11.7%. What is this microfinance loans? See, this microfinance loans, they are provided without collateral to the people whose annual income is less than 3 lakhs per annum. Okay. So, if you see in this scenario, the microfinance loan book with 31 to 180 DPD. DPD means due days. Okay. Which means that there are loans with dues more than 31 days. Okay. Where the due is between 31 to 180 days, those kind of loans, those kind of microfinance loans, it has increased from 4.7% to 6.5%. Let me repeat it once again. Microfinance loans with 31 to 180 due days, they have failed to pay. Okay, it has been, that is the due amount has been overdue for from 31 to 180 days. Those, if you see, those had accounted just for 4.7% in September 2024, but now it has increased to 6.5%. And also borrowers availing loans from 3 or more lenders, if you see, that has declined a little to 11.7%. So there are multiple borrowers, they will go and avail loan in multiple fintech companies, multiple NBFCs. So today they will take an amount from one NBFC. Tomorrow they'll go to another NBFC and take an amount. So there are borrowers who does such things. So that, if you see, that has comparatively reduced a little bit. That is to 11.7% in March 2025. The next news is RBI has issued final guidelines on the due diligence of the Aadhaar-enabled payment system touchpoint operators. So, what is this Aadhaar-enabled payment system? So, this is how an Aadhaar-enabled payment system looks. So, see, if there are people who cannot reach the banks, right? So, there are areas where the traditional banks are not there. There are areas where the ATMs are not there. So, how will the persons try to withdraw money? And there are also persons where they do not have debit cards. For some reasons, people do not have debit cards, especially the illiterate people. They might think that someone might misuse their debit card and withdraw money. So due to these restrictions, they might not own a debit card also. For those kind of people, if they want to withdraw money, this enabled payment system plays a very vital role. So what is required to withdraw money from this system? The first is the Aadhaar number. And next is their biometric. So when the Aadhaar card is issued, first you would have issued an Aadhaar number, right? So the Aadhaar number will be linked to you, and also they would have scanned your iris. That is the eye movement. The iris would have been scanned, and also your biometric would have been scanned by the government, and only after that the Aadhaar has been issued to each and every citizen. So now, when a person wants to withdraw money, you're using this system. The thing is Aadhaar number and the biometric device. These two combinations should have been appropriate. Okay, so should be correct. And when this both is successful, they will be able to withdraw the money. Okay, so who provides this service? So this is provided by AePS touchpoint operators. So they are called as AePS touchpoint operators. So now, if you see, the RBI has issued guidelines regarding these AePS touchpoint operators. What happens is that sometimes the touchpoint operator would misuse. Okay. It would misuse the Aadhaar number and the biometric device and try to withdraw money from the customer's account. So many fraudulent activities used to take place. So that is why now RBI has told that any banks who are trying to onboard these operators, a proper due diligence should be done, a proper verification should be done, and then only they should be given this job. That is what this news will talk about. As I said, Aadhaar number plus fingerprint is the prime thing to withdraw money from this Aadhaar enabled payment system. So, to streamline onboarding, so to make the process of onboarding the operators easy and quick, and also to enhance fraud risk management, these final guidelines were issued. So, this, if you see, this will be in effective from January 1st, 2026. So, this final guidelines will be in effective from January 1st, 2026. First one, if you see, these guidelines, they are issued under the Payment and Settlement System Act 2007. Remember, they are issued under the Payment and Settlement System Act 2007, and these Aadhaar enabled payment system, they are operated by the National Payment Corporation of India. So, what are the various things that are mentioned under this guidelines? First, under this guidelines, what is ATO? What is an ATO? That has been defined. Who is an ATO? That has been defined. Next, the due diligence. Next, the re-KYC. Suppose you have onboarded the operator, but what if they have become inactive? What should be done to activate them? That is being mentioned. And the last one is enhanced risk management. So all these 4 categories have been discussed in this final guidance. First, definition of ATO. Aadhaar enabled payment system operator. So he is an individual onboarded by the acquiring bank who operates the Aadhaar enabled payment system touch points using the Aadhaar number and biometric device. So that person is the person who will carry that biometric device to the biometric device and the other payment POS machines also to the people, okay, to their households, and they are allowed to do those transactions on behalf of the bank. So these are those kind of people and they are appointed by the acquiring bank. Next, compulsory due diligence. So you have to conduct, the banks have to conduct due diligence before onboarding them. So this is as per the existing due diligence or the KYC norms that is already existing. So as per that, a proper due diligence should be done. Suppose what happens is sometimes the business correspondent that the banks would have already appointed, they themselves act as an Aadhaar enabled payment system operators, okay, touch point operators. So the banks, they decide, right, why can't the BCs itself act as the operators? That is also allowed. So in case of onboarding the BCs itself, the KYC process would have been done, right? That itself is accepted. A separate KYC norms is not required. When the BCs were onboarded, when the business correspondents were onboarded, that time itself a proper due diligence and KYC norms would have been checked. That itself can be adopted when the BCs are accepted as the operators, that is Aadhaar enabled payment operators. When they are accepted, that KYC norms itself is applicable or accepted. Next, re-KYC for inactive ATOs. So sometimes what happens, the operators are onboarded, but they become inactive due to many other reasons. Okay. So here, so if they are inactive for 3 consecutive months, remember 3, not just 3 months, 3 consecutive months, no financial transaction has been carried out for a customer during this time period, then the banks have to acquire the KYC again. The acquiring bank is required to carry out the KYC of the ATOs before allowing him or her to resume operation. Say suppose they have been onboarded in the month of November. Okay, November 2024, this operator has been onboarded by a specific bank. Okay, and Jan to March 2025, not even single transaction has been done. Not even single financial transaction has been done, carried out by the customer. So then this happens, then that ATO becomes an inactive ATO. Okay. So if they want to, due to some reason they become inactive, now they want to operate or they want to become active from April 2025, they just cannot be active. Okay, they have to submit the KYC again. So they would have submitted the KYC in November 2024 when they were onboarded. But since they had become inactive in this continuous 3 consecutive months, they have to submit the KYC again and only then they should be allowed to be active. Okay. Next, enhanced risk management. So the acquiring banks, they are required to monitor the activities of ATOs through their transaction monitoring system on an ongoing basis. So even after monitoring, the work of the bank is not done. They should continuously monitor the ATOs. That is, what all should be monitored? The location, the type of ATO, the volume. Okay, all these has to be monitored so that there is no any risk or there is no any fraudulent transactions taking place. So this all should be reviewed on a periodic basis. So these are the various things that have been mentioned in the final guidelines released by the Reserve Bank of India. Next is about a meeting that has been held by the Union Minister, the Finance Minister Nirmala Sitharaman. Okay, so the Union Minister Nirmala Sitharaman, she had chaired a high-level meeting to review the performance of the public sector banks. So various top directors and the top key personnel of the public sector banks participated in this meeting. So if you see, various things were discussed like the credit, the customer service, grievance redressal, digital banking, cyber security, all these things were discussed in the meeting. So we will discuss the important points one by one. First, the net profit. The net profit, if you see, it has increased from 1.04 lakh crore to 1.78 lakh crore. This is from financial year 23 to financial 25. So as of financial 25, the net profit reported by the public sector banks. Okay, here the all information that has been provided here is only the details of the public sector banks. Okay. So here if you see, as of financial 25, the public sector banks had reported 1.78 lakh crores compared to just 1.04 lakh crore in financial 23. Next is the overall business of the public sector banks. That if you see, it has increased from 203 lakh crore to 251 lakh crore in financial year 25. So here the business includes both the advances and the deposits. Together only it includes. Okay. And in respect to net NPA, if you see, that has gone down from 1.24% to 0.52% in financial year 25. And capital adequacy ratio, we have enough amount, that is the public sector banks have enough amount of capital with them, that is 16.15%. Now in comment section, you have to tell me what is the capital adequacy ratio that the banks have to maintain. That is the public sector or private sector, they have to maintain the equal amount of capital adequacy ratio, right? So what is the capital adequacy ratio that they have to maintain? So here you have to remember the financial 25 data. You don't have to remember this data, but you have to remember the financial 25 data. Please remember it. Next, if you see, there the finance minister had given certain directions or instructions to the public sector banks. First is that the finance minister has instructed that the public sector banks has to participate deeply or strongly in the 3-month financial inclusion saturation campaign that will start from July 1st, 2025. So from July 1st, 2025, a financial inclusion saturation campaign is expected to begin. In that, the public sector banks have to participate vigorously. Next, they have to prioritize the renewable energy sector, which means more loans to be provided to the sectors who are venturing into the renewable energy. Next is strengthen financial inclusion schemes like Pradhan Mantri Mudra Yojana, Kisan Credit Card, Vishwakarma scheme. So all this, if you see, should be given more priorities. More loans should be provided under the schemes by the public sector banks. And also focus on the agri credit, that is to provide agri credit in the under low productivity districts. So focusing on the under low productivity districts should be the first priority that the public sector banks should be given. And also the finance minister had reviewed the new credit assessment model for the MSME. If you see this new credit assessment model, it was launched in March 6, 2025, and by now if you see, they have already sanctioned 2 lakh loans worth of 60,000 crores. Okay, the new credit assessment model was reviewed by the finance minister, and under the review it was observed that nearly 2 lakh crore loan worth was nearly 2 lakh loans were sanctioned, and the worth of the 2 lakh was 60,000 crore. So these are the various directions and the instructions issued by the finance minister. In the previous slide we discussed the numbers, right? So you have to remember the financial 25 numbers. It is very, very important. We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this static banking awareness course lays a foundation to the current banking and finance news. Now you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the static banking awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI.
You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next set of news is going to be short news. That is, all type of news are going to be like one-liner news. The first news is about the president appointment. So if you see the Asian Infrastructure Investment Bank, you should tell me in the comment section where is the headquarter of Asian Infrastructure Investment Bank is in. Okay, so now they have appointed a new president and she will be the first woman president of AIIB. So if you see Zhao Jie, I'm sorry, I'm not able to pronounce it right. It is Zhao Jie. She will be the first woman president of Asian Infrastructure Investment Bank, and if you see, she will be replacing Jin Likun. Okay, she will be replacing Jin Likun, and she was the former vice finance minister of China. So the highest shareholding, if you see, China is the largest shareholder of AIIB with 26.54% voting share. Next, followed by India with 7.58%, and third is Russia with 5.9%. Remember the new president named Zhao Jie. Next is about a partnership. If you see, the Bengaluru-based PhonePe company have partnered with the HDFC Bank, and together they have launched a co-branded credit card. Okay, a co-branded RuPay credit card. So this has UPI integration. That is, this can be linked with the UPIs and made UPI payments, UPI QR code scanning. All these can be done using this credit card. So under this, if you see, there are two variants. The first is Ultimo, okay, and the second is Uno. First is Ultimo and the next is the Uno. These are the two variants under this co-branded credit card. Next is about the rating, that is the GDP projection given by the Investment Information and Credit Rating Agency. In short, you call it as ICRA. So in that, if you see, it has projected that the GDP of the India will grow at 6.2% in financial year 26. So in financial year 26, India is expected to grow at 6.2% as per ICRA. But if you see, the RBI's projection is 6.5%. Similarly, the CPI, that is the inflation projection by the ICRA, is 3.5% for financial year 26, and this is also lesser than the MPC. The recent MPC meeting had happened, and in that they have forecasted 3.7%. So this 3.5% is also lower than the MPC forecast. Remember, the GDP forecast is 6.2% and the CPI, that is the inflation forecast, is 3.5%. Next is about the current account surplus report that has been released by the Reserve Bank of India. So regarding the balance of payment for the fourth quarter in the sense Jan to March 2025. Okay, so how has been the balance of payment? That is whether we have imported more or exported more, or more investments, foreign investments have inflowed, or more foreign investments have been done outside, or more remittances have come. That is, many people outside India have sent money. All this is observed, and regularly RBI releases such report. Okay, so here this covers quarter 4, that is from January to March 2025. So in that, if you see, it has recorded a current account balance surplus of $13.5 billion. Remember, for Q4 financial 25, India has accounted a surplus of 13.5 billion. That is almost 1.3% of GDP. Compared to, if you see, Q4 financial year 24, that is just 1 year back, the amount was just 4.6 billion. That is, the surplus was 4.6 billion, but now it has been increased to 13.5 billion, a huge surplus increase. So if you see one by one, merchandise trade deficit. Here trade deficit, it means that we have imported a lot of goods than exporting. So that is why a trade deficit is observed. So here the merchandise trade deficit has been 59.5 billion compared to 52 billion in Q4 financial year 25. Okay, there has been an increase in the merchandise trade deficit, but it has been compensated by the services receipts. That is, we have exported a lot of service, and that is why we have received a lot of money from the services. Okay, so since more export of services has happened, that has been increased to 53.3 billion compared to 42 billion in Q4 financial 24. Okay, I'm telling you once again, the trade deficit has increased, but also the services receipt, okay, that has also increased. That is why it has compensated, and the overall current account balance has increased to 13.5 billion. Next is remittances. That is, people who are residing outside India, they send money to their family members living in India, right? So that amount also has been increased, but only marginally. That is from 31 billion to 33.9 billion. Okay, remember these, that's enough. Next is the financial 25 performance. The previous one we saw was the quarter 4. Okay, only for the last quarter of the financial year 25. This is the overall financial year performance. So here the current account deficit, if you see, it has narrowed down to 23.3 billion from 26 billion in financial 24. So this has come down compared to the previous year. It has come down a limit. That is the current account deficit. Next is foreign institution investors. If you see, in case of FDI, it has fallen sharply to 1 billion from 10 billion. This is a huge fall down. So if you see, in previous financial year, 10 billion amount has been invested, but this year it has come down to 1 billion. Similarly, in case of foreign portfolio investors, this is for short-term purpose they invest, right? So that has also come down to 3.6 billion compared to 44 billion. So both FDI and FPI, they have strategically come down, okay, with a lot, huge difference. From 10 billion to 1 billion and from 44 billion to 3 billion. This much it has been decreased. Next is about a license that a company has got from the Reserve Bank of India. So the Insti fee, okay, Insti fee, it is a fintech venture. It has secured the final license, that is certificate of authorization from the Reserve Bank of India to operate as a payment aggregator. So this has received the license, the final license from the Reserve Bank of India to operate as a payment aggregator. So this, if you see, this is the only company based in Goa to hold this payment aggregator authorization. Next is the Bengaluru based Slice. It is a leading fintech company based in Bengaluru, and we also saw recently that it has completed its merger with Northeast Small Finance Bank. Okay, so this, if you see, it has launched a UPI credit card, and this one also has launched India's first UPI powered bank branch in Koramangala. Remember this, very important. If they ask you which entity has launched this UPI powered bank branch, then you should know, and also you should know the location, that is in Koramangala, which is also in Bangalore. Okay, so this UPI credit card, if you see, this has 0 joining fees and 0 annual fees also, and offers up to 3% cashback is available. Next is all key banking services is provided via UPI, that is including digital onboarding, cardless cash withdrawal. You can also deposit using UPI, withdraw using UPI. So all these banking services are provided in this bank branch located in Koramangala. The next news is Bengaluru based Jumbo Tail Technologies Private Limited. Okay, it is an e-commerce and a retail platform for food and groceries. Okay, this is an e-commerce company. This has become the 5th unicorn in 2025 in India. So this has raised around $120 million, or that is around 1028 crores, and now it has become the 5th Indian startup to join this unicorn status. Now, what does this unicorn mean? So when a startup has crossed a valuation of 1 billion, then that startup is called as a unicorn. Okay. So if you see the other unicorns in 2025, if you see that has achieved this unicorn status in 2025, you see they are Netradian, Chespay, Porter, and Rules Pet Food Private Limited. These are the other 4 startups that have achieved unicorn status in 2025. So this fund, this money, if you see the $120 million that has been raised, it will be used to scale the AI solutions capabilities and also support in the talent acquisition. That is, in the recruitment process also, this money will be used. The CEO of Jumbo Tail is Karthik Venkateshwaran. The next news is recently the State Bank of India, the largest public sector bank in India, it has celebrated the 70th anniversary. Okay, and so State Bank of India was established on 1st January 1955. So in this 70th anniversary, it had announced a solar rooftop program. What is this solar rooftop program? So here, if you see, it will solarize 4 million homes by financial year 27. Remember, 4 million homes by financial year 27. Apart from that, it has also decided to plant 9 lakh trees in the Kaveri basin. Okay, solarize 4 million homes by financial year 27 and also plant 9 lakh trees in the Kaveri basin. Also, State Bank of India has done the highest agriculture spending in India, amounting rupees 3.5 lakh crore for the financial year 25. Okay, and the CSR, that is the corporate social responsibility that each company that are profitable should do. That, if you see, the amount of corporate social responsibility that the State Bank of India has spent is around 610 crores. Then State Bank of India has also opened global trade financial centers in Kolkata and Hyderabad. So this, what is the purpose of this global trade financial centers? So they will process the trade quicker and faster and also in an easier and an efficient manner. So basically here, if you see, you have to know what was the program, what is the solar rooftop program target, that you have to know, and also the agriculture spending, and also the CSR, the amount that has been spent, and especially this, that 2 trade finance centers has been opened by the State Bank of India, one in Kolkata and the other in Hyderabad. That is enough. Next is the Jaipur-based AU Small Finance Bank. It has partnered with LIC. Okay, why? What is the purpose? The purpose here is the bank assurance. That is, now the LIC insurance policies can be provided to the AU Small Finance Bank customers. So here, if you see, the LIC will use the customer base of the AU Small Finance Bank, and it can distribute the LIC insurance products to the AU Small Finance Bank. So here, the founder and the MD of AU Small Finance Bank is Sanjay Agarwal. Next is IndusInd Bank has launched a platform for the exclusively to empower the MSMEs, that is the Indie for Business. So here, if you see, this is a digital banking platform designed to empower the India's MSME, which comprises over 60 million businesses. So what will this platform actually do? So the platform allows the business to make bulk payments for salaries, vendors, also pay the GST, income tax. All this can be done via the platform in an easier and also in a quicker manner. Remember the product name Indie, and for whom it was launched? For the MSME. Next is the AIB, that is Asian Infrastructure Investment Bank. It has planned to invest 1,301 crores in the Aditya Birla Capital. Okay, so this AIB will invest 1,301 crore in Aditya Birla Capital, and through which means? That is through the non-convertible debenture means. Okay, so this it invests 1,300 crores. In turn, the Aditya Birla Capital will provide them non-convertible debentures. Non-convertible debentures are nothing but bonds that cannot be converted into shares or equities at the time of maturity. Okay, this is what non-convertible debenture means. That is, convertible debenture means at the time of maturity, you will have an option to convert it into shares. But non-convertible means you don't have the rights to convert into shares. You can only get the principal back at the end of the maturity period. That is what non-convertible debenture means. Okay, so where will this 2,300 money be put into use? So this will be put into use for renewable energy generation, which includes solar, wind, and also hydrogen production. So to various purpose, this money will be put into use. Next, if you see, the ACC, Appointment Committee of the Cabinet, which is headed by the Prime Minister, has extended the FSIB, okay, has extended the FSIB chairman tenure by 1 more year. So 1 year extension has been provided to the Financial Services Institution Bureau. Financial Services Institution Bureau, which makes recommendations of key personals in the public sector banks, in the insurance company, public insurance company. So in all these, the key persons like the chairman, the whole-time directors who should be appointed, that recommendation is made by the FSIB, that is Financial Services Institution Bureau, to the ACC, and the ACC makes the final appointment. FSIB only makes the recommendation, ACC makes the final appointment. So here, if you see, Banu Pratap Sharma is the FSIB chairman, to whom 1 more year extension is provided. So apart from the chairman, the other 6 members of the FSIB has also been provided this extension. So the other 6 members are Animesh Chauhan, Deepak Singhal, Shailendra Bandhari, Usha Sangwan, A.V. Girija Kumar, and Sujay Banerjee. Okay, Sujay Banerjee, these are the other 6 members for whom 1 more year of extension has been provided. Next is RBI, Reserve Bank of India, appoints Keshavan Ramachandran as the new executive director. So Keshavan Ramachandran will be the new executive director. He will be leading the Department of Regulation. Apart from this, SEBI has also appointed a new executive director, Sunil Jayawant Kadam. Okay, Sunil Jayawant will be the new executive appointed by the executive director appointed by the SEBI. Here, you just have to remember the new executive director name. That's it. Next is IFC, International Finance Corporation. So one of the arm of the World Bank. It has committed to invest 460 crores, okay, in the IndiGrid Trust. So in the IndiGrid Trust, that is India's first listed power infrastructure investment trust, InvIT. Okay, this is the first, remember this, first listed power infrastructure investment trust, IndiGrid. In that, IFC will invest 460 crores. So where will that money be put into use? That will be used to construct India's largest 180 megawatt standalone battery energy storage system. Okay. So this will be used to construct battery energy storage system in Gujarat. Remember the place where it will be constructed. So here IFC 460 crores to whom? To IndiGrid. And where will this 460 crores go? For constructing the 180 megawatt battery energy storage system. And which place? In Gujarat. So these are the 5 things that you have to remember. So this, if you see, this storage system will be operational, completely operational by February 2026. IndiGrid Trust MD is Harsha. Next is Mashrik. So Mashrik, if you see, it is a UAE bank. Mashrik. It is a UAE bank. It has become the first UAE bank to receive approval to operate as an international banking unit in the IFSCA. See, if any banks want to operate in the India other than IFSC, other than the GIFT City, if any bank wants to operate, then they have to get approval from Reserve Bank of India, right? But in case of GIFT City, from whom should they get approval from? They should get approval from IFSCA. Okay. So here it is the first UAE bank to receive in principle approval from the IFSCA. So here what it will do, it will provide foreign currency loans and also treasury and various risk management products will be provided by this Mashrik UAE bank.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Thank you.